Hey, welcome everybody to the 40 Finance channel. Today I'm going to do some live video that I would normally record because I'm a little short on time. But I was going through the Morningstar website yesterday and just trying, as I normally do, just to see what they had tabbed as undervalued stocks in this market right now. Obviously, things have run up here a little bit. We had some sort of a dip last week, depending on what type of stocks you owned. But generally speaking, you know, large cap stocks, mega cap stocks has fared pretty well. So in my opinion, when Morningstar tabs a stock as under fair value, I view them as a conservative opinion. So when they say under fair value, it raises my eyebrows a little bit. Certainly in the case of smaller growth names, which they won't even cover some growth names, but definitely in larger cap stocks, when Morningstar gets in and they do their valuations, if you see it under fair value, it doesn't mean you have to go out and buy it now or, you know, it's the next big $1 million stock. But in my opinion, these stocks are all worth researching more if they interest you, because there might be something here. All right, so I'm going to take a look at our first one here. And the first two that I've got on the board are the obvious ones. I'm going to knock out two obvious ones here that I think everybody should know, but that'll give a chance for the people to kind of come into the live stream. So first one on the board is Amazon. Price today at $32.68. And if we scroll down to the Morningstar analysis, you can see that their fair value estimate is $4,200. Last close, which would have been on Friday, $3,200, but this is the live price today on the Morningstar site. So you've got, if you believe this, or if you decide to dig into this more, you know, you arguably have plus 25%, maybe just a little shy of that, upside from today. And what's great with a company like Amazon is you also have this economic moat, a wide economic moat, which insinuates, of course, that Amazon is at less risk from competition coming in and ruining their business. And when Morningstar assigns a moat, and we'll see a couple that are not moat worthy here today, but when Morningstar assigns a moat, they are projecting out for multiple years. So it's either 5 or 10 years, okay? So when they say a wide moat, it means a sustainable one for many, many years in advance. All right, so that's Amazon. The next one that I think everybody recognizes, but we can't quite figure out what to do with it, or excuse me, I can't quite figure out what to do with it. Give this site a second here. I'm using this courtesy of my public library, Cincinnati Public Library, and I've done a video on this in the past. Alibaba is going to be our next stock. I've done a video on this in the past if you want to go back and look at the channel of how to access tools like Morningstar through your public library. You know, it kind of depends on what city you live in and how big their library archives are, but, you know, Cincinnati's not exactly the business hub of the planet. So hopefully, since I can get to it from here, you can check out your public library and potentially access this information as well. But our stock number two, which to me is like Captain Obvious, is Alibaba. Price today of $159. We've talked about this a lot on the live streams. And if you go down to Morningstar, they have fair value at $302. And they also have a wide economic moat. And in Morningstar's world, you see this 1-star price and 5-star price. In Morningstar's world, a 5-star price basically means, you know, the no-brainer price. Like, hey, it gets to this level, it's going to be hard for you to see that again. We didn't look at that at Amazon, so I can't remember. Do I still have an Amazon tab? No. So we know what the risks are for Alibaba, right? It's not just the fair value that comes into calculation here. It is also the political environment and what the government has sort of slapped risks on these companies. So there is another risk here that's not really showing up in Morningstar. However, from a just straight dollars and cents perspective, they still like it. And if you can see this, I'm going to scroll down. Our last update from the Morningstar analyst was August 4th. So, and they have, one second here. They have made updates in light of the government's new stance. So, not sure if I can find it really quickly here. Let's see, risk and uncertainty. Here we go. All right. So they do call this out. China's e-commerce landscape increasingly competitive. Oh, and this is dated April of 2021. So they haven't updated the risk and uncertainty. But if you just want to close your eyes and base it off fundamentals, there's certainly something here. I would say added risk for all the reasons we just discussed. All right, so those are your two obvious undervalued stocks. And I just want to say what's up to Del Gray and Lou and Kevin and Woo Wack. Thanks for joining and testing out the chats. I'm going to go through this list and then I will pick off some questions at the end. So we have about 5 stocks to go. Covered BABA, covered Amazon. Those to me, not a whole lot of shock and awe in there, but I got another one. You'll have to wait for it to load. That I think is crazy that this is even on Morningstar. All right, so bear with me. It's not my internet, it's the Morningstar site. Palantir Technologies. Palantir Technologies, I'm surprised they're even covering this stock just because of its, relatively new, medium track record of financial success. This is typically one that they wouldn't even get their hands in, I would say, in the past. But here we are. Fair value, that's $28 for a stock like Palantir with an enormous number of shares outstanding. I own Palantir. Just for the record, I also own Amazon. I do not own Alibaba, so just to throw that out there. So Palantir at 28, they have their 5-star price at $16.80. I don't know if we'll ever see that, but you never know. And more shockingly, a narrow moat for Palantir. This is one that, in my opinion, could easily qualify under Morningstar's definition as a no moat stock, only because they project moats out so far. Moats today, the way that probably you and I think about it when we're reading through stock news, we probably are thinking about a moat in the short term. Morningstar is thinking about it for several years, and the fact that Palantir got a narrow moat upgrade recently and a fair value upgrade is big, and it makes me feel good. Today's price, let me see here. Today's price, at least according to this site, is $24.70. I think that in a stock market meltdown, you could probably get Palantir for 20 or close to it, but it just depends on how long you've been waiting. I have built the position up for myself where I kind of feel comfortable. However, if I see it certainly under $20, I'll likely add more, certainly with this news coming out. So Palantir. All right, surprise stock number 2. I was shocked that this one was in the system. This is a stock I do not own. What do we got? SoFi. SoFi Technologies, a SPAC nonetheless, I believe. I shouldn't say that for sure. I think SoFi came in as a SPAC. Current price of $14.42. Fair value, $20.50. That's nuts for SoFi. I've looked at SoFi a couple times. It's a service I've used in the past. You can check my videos. I've used them for a kitchen remodel loan, and it went very well. So now that I've used them, I get every offer that that they throw out. But long story short, I would have never considered this to be a Morningstar stock this early. And for them to put 2050 on it is even more surprising. It's important to note that they do have no moat for SoFi. So for myself, I do like to see either narrow, some sort of existing moat. Perhaps it's coming. If you read through the full analysis, and you see they have these little chapters over here. So for purposes of this video, I'm going to skip right to moat. And let's see what they say, because they said a no moat rating. This was updated June 15th. SoFi has identified an unfilled product need in the marketplace that could potentially allow the company to build a defensive competitive advantage. Company targets young, high-income individuals that may be underserved by traditional full-service banks. Company operates without physical locations and engages exclusively through mobile app and website. SoFi has built a broad offering of lending and financial services to encourage its customers to structure the entirety of their finances around SoFi. So we'll stop there. So I guess what Morningstar is kind of saying there is that, that they appreciate the way this is set up. And again, they're using the word potentially. They could see a moat develop for SoFi. Meanwhile, $20.50 on fair value. Stock's trading at $14.41. I think it's been in a bit of a nosedive recently, if I remember correctly. So maybe there's something there. I do not own SoFi. Right now, I don't have any plans to buy it. All right, next on the list. Check my writings here. Here we go. It's a stock I thought was a little overvalued, and I own this one, okay? So this is what surprised me. Taiwan Semiconductor. All right, this is a commodity, is what chips are turning into, or they have been viewed as in the past. So Taiwan Semi, this, I think I'm in at about $90, something like that. Price today at 111. It's taken a stumble recently, just down a little bit. They're putting a lot of capital into their business, which will likely hurt EPS in the next year or so. Fair value of 133. Wide economic moat. 5-star price, which, is in Morningstar's world, is supposed to be, awesome price, jump in right now. I selfishly was happy to see that my price was right in there. And let's see what we got on moat. We believe TSMC's wide moat stems from its cost advantage and intangible assets, which are realized from its leading position in processing and process technology or nodes. Sorry about that. TSMC's long-standing leadership comes from its ability to correctly and consistently prioritize the right areas in which to innovate while maintaining fiscal discipline. I would also add, which could very well be on here somewhere, I would also add that their client list is second to none, in the sense that you do have AMD, you have Apple, several others that they build chips for. So I was happy to see this. I was just a little surprised, not because TSM's a bad company, but just because the stock had run up a little bit. And whenever you're running up in the chip world, there's this, you know, there's a cliff eventually that chips will have a down year. I personally don't project that for a couple more years out. I'm just going to say that. I think we're still going to be running hot, but TSM historically is trading at some of the highest valuation points that they've ever done. So this is forward PE of 27. That doesn't sound like a lot, but in chip space, you're talking about 15x, 10x sometimes. So they're trading hot right now. That's what made this one an interesting fair value pick for me anyhow. All right, two more. If you're playing at home, enter your picks. This is a stock I have never covered before, and I do not own it. All right, I'm pushing the button. Here we go. This is an industry I, in general, do not follow because it's not yet set up in America. Canopy Growth. So this is a cannabis supplier. And we look at the valuation, $30 fair value. This one was updated very recently. Canopy further trims losses in Q1, but unlikely to hit target of positive EBITDA by fiscal year end. So maybe that's where the weakness is on this one, if people were expecting EBITDA profitability. Either way, you're at 17. They're calling out a 30. Now, no economic moat here. This is one of my big fears about the cannabis market. Not to mention that since the United States federal legality stuff hasn't went through yet, it's kind of, I'm playing that game already with DraftKings and waiting for legalization in certain states. I'm not in the mood to play that game across two different sectors. I understand the people that invest here, and I think that there's opportunity. But for me, the reason that I don't talk about it is not because I'm anti-cannabis. It's just, it's a risk I don't need to add to my portfolio right now. However, if you are in this game, in this sector, check out Canopy as a potential undervalued stock. All right, last one. I'll give you a tip, or I'll give you a hint. You see if you can guess it for 3 seconds. This is in the food sector. I know food sector may not be right, but food sector, and you can buy it at the grocery store. So I'm going to give you that because since this takes a little bit to type this in before it shows up on the screen. Place your bets. Loading, loading. BYND Meat. BYND Meat, which is a stock I do not own. It's a stock that I likely will never own. Not because nothing against BYND Meat at all, but it's a product that I'm not interested in my personal life. And so it's just unlikely that I'd ever buy it. But it is a very intriguing industry, to say the least. And even as a person who regularly eats meat and doesn't really have an aversion to any products like that, I will say you cannot help but notice the changes in dietary expectations at any location across the world. Whether it's a restaurant, you sit down, your expectation is that there's vegetarian option, that there is, I forget the name for the celiac disease, but no grains or whatever. That's expected anywhere that you're paying for food. And so BYND Meat, I think that there's obviously a market for it. It's just not one for me. All right, so what do they got? They are putting 144 on the fair value, and they're doing no economic moat. 5-star price would be under 90. Today we're at 121, so the fair value spread, if you will, is getting a little tighter on this one. But BYND Meat is out there. I tend to agree with the no economic moat. Let's see if I can give you a good example. So let's just make the assumption here that Beyond Meat's economic moat is perhaps a recipe and brand, right? So brand takes forever. But let's see what we say. Beyond Meat is pioneer, la-da-da, first vegetarian burger, da-da-da. While Beyond Meat is not the first PBM to hit the market, as Morningstar brand has been on the market since '75, Beyond Burger revolutionized the category. Also, unlike its predecessors, Beyond Meat seeks to make its products indistinguishable from their equivalents. Da-da-da. I want them to get to the point where they're talking about the moat. Goodness gracious. Well, I wanted to, here we go. We do not believe Beyond Meat possesses a cost advantage. As Beyond Meat is still in the early investment stage, the firm did not report adjusted profit. They didn't do a really good job of getting to the point here, but I think what you will see from Morningstar in general when it comes to stocks that are basing a lot of their moat on brand value, which as a casual observer, I would say that Beyond Meat is, if they have a moat, it's in brand value, right? Because food is easily replicable. There's a million different ways to cook a hamburger. Some people like some better than others, but nobody owns the hamburger, right? So if the brand is a competitive advantage, just the company is not old enough to offer a moat valuation on that brand, right? So that's probably, without me digging through paragraphs of detail, that's probably what Morningstar is saying there. So, all right, so that is really 7 stocks because I gave you Alibaba and Amazon just to kind of lead off. I think everybody knows those are overvalued. But the list was Palantir, SoFi, Taiwan Semi, Canopy, and Beyond Meat. That's our 5 Morningstar undervalued stocks. And I'm going to pop over to the chat and I'll take a few questions. Good to see everybody. Real quick, my phone is buzzing, so I have to do all right, sorry. Let's see who's in the chat. Can you check out Enthusiast Gaming's if Del Gray is still here? I will look at it. I have never heard of that stock before, but we'll look at it together. Good day on the market, by the way. Everything bouncing back. I don't know if I like that or not. It's good for our bottom line, but I was surprised how ferociously we bounced back, particularly some of our struggling friends in the Russell 2000, NASDAQ, etc. The Enthusiast Gaming Holdings, EGLX, under $5. When did this one come out? Wow, this has been out for a little while. 2019. Price to sales under 5. Not profitable yet. I don't know a ton about this company. It is, I'll try to squeeze this in. Enthusiast Gaming engages in media content, esports business, international, online network of approximately 100 gaming-related websites. Video Gaming Expo. Okay, so basically, can I go ahead and just call it a video game media company? And represents gaming influencers. So, I will say first pass, On the analysis side, we got nothing. So it's hard for me to see what their projected growth rate is unless somebody's going to cover the stock. I will look at TipRanks for you since I'm not super familiar. That was EGLX. You got a few buys. Trying to figure out how old these are. 13 days ago. You got some 10s, 7s. Most recent is 10 days, 26 days ago. The problem that I would have on a stock like this, just to be super honest, is, and I can't do it in 5 minutes, right? In the time I was trying to give you an opinion, like I have to figure out what they're generating and how is that supposed to grow. So I'd likely, since nobody's covering this stock, you'd have to spend time in the earnings reports and the commentary as far as guidance. Generally speaking for myself, I'd want a company, and I'm sure this is happening in this particular niche, but I want to see double-digit EPS progress. It doesn't necessarily have to land on the positive side, especially a young company like this. I want to see double-digit revenue growth, ideally forecasted for the next 3 years. So unfortunately, there wasn't enough information to give you a quick thing. Let's see. Lou says, I'm not even going to try. Duran, Handy Duran, hello, just added Amazon, good for you. I mean, if you're holding for 3 to 5 years, $3,200 at their rate of EPS and revenue growth is absurd. So I think that is a good long-term investment, certainly more stable as a company than a lot of other alternatives, right? Amazon's not going out of business. So the risk reward for Amazon, I think, is really high. Are there stocks out there that will outperform Amazon over 2 to 3 years? Of course. There's going to be stocks that go up 200%. But what's the risk reward to each one? We can't predict the future, but we know one thing, Amazon's not going out of business. So if we can look at the past and try to assess the future, you got a plus $1,000. I understand the share price is high for some people, but $3,200 turns into $4,200. And if you remember my price target video, I have that happening somewhere in the neighborhood of February next year. That's not a bad investment at all. Lou, coin and SoFi are crazy cheap. I'm getting more and more interested in Coinbase and crypto in general, not to be confused with, the altcoins and stuff like that. But the more that I've been following people very specifically talking about Bitcoin and Ethereum, I keep running into Ethereum on different sites, right, as a way to pay. So that has started to kind of build up some questions in my mind, and I'm certainly not going to sell my stocks and buy Ethereum. I'm not going to sell my house and buy Ethereum, but I am going to be adding to my crypto investment. And on the stock side, Lou, I've been kicking around Coinbase. I get really, really nervous about their fee structure and what that means for the future when somebody essentially undercuts them. And then also, maybe you guys can comment the miners. So Marathon Digital, and also, what was the other one I was just looking at today out of the blue? 1 second here. Riot Blockchain and Marathon Digital, both of those companies are projected to be EPS profitable next year. And I really actually do believe, and I have no rationale for it whatsoever, I really do believe that Bitcoin and Ethereum are going to be worth more in the future than they're worth today. Unfortunately, I just can't, I'm not good enough in this crypto game, I'm not well versed enough, but I'm with you. Mr. Mugai, hi, how are you doing? I keep buying Amazon and BABA from June. Wow, 100,000 in both. I think your time will come. I think your time will come. I don't see, well, of course, we're all at the mercy of the market and we're all at the mercy of corrections and outside factors, but I don't believe that you have much to lose at these prices, just like I got done saying on Amazon. Now, Alibaba, I'm a little more averse to because I just don't know where it's going. But if you got to say one thing about Alibaba, whether or not you believe that they'll have further government interaction on the negative front, the price for a mega cap tech stock, the valuation is absurd. And nobody's going to argue that. And Morningstar, despite the uncertainty, was hanging 300 on it. So that was interesting. Sam, do you like here right now? I haven't looked at it in a long time. I sold it a year or two ago, and it's a good company. They make the headphones for gamers. I have 3 sets in my house, not for myself, but for my kids. And I got what I wanted out of that stock. If I had a problem with here, and one of the reasons that I got out of it or took my profits was that it's a ebb and flow stock, right? So does gaming keep on keeping on? I think so, but you need this like poof next wave. That next wave could be Xbox and PlayStation finally being in stock somewhere. But I'm not sure. So I'm not going to get back in it. Oh, and then the other thing, besides the waves, the competition and the moat, right? Anybody can make headphones. You see them everywhere, right? So I get nervous about that when the next like 10 influencers hop on the Corsair headphones, what happens to here, or vice versa for that matter. So I'm staying behind. Lou, Tattooed Chef, I think you might have, I bet you are guessing about the Morningstar stock, so I'm going to leave it there. I'm waiting for Beyond Vegetable, which is beef made into vegetables, Chestad with the zinger. I like it. This dude really said Amazon and Alibaba are overvalued. I think Lucky Mig, I think you got it wrong. We're talking undervalued stocks today. So thanks for playing. Eric Lee, any thoughts on apps value? I hear nothing but good things about apps. We've talked about it before. Will I buy this stock? I don't know. Probably not. I'd be inclined to say no. However, fundamentally, it's a good play. It's down so big, and I would encourage everyone, you see this, look at this earnings. Like, they're doing what a company should do, right? Revenue's going up, so are the earnings. Revenues are climbing, earnings are in step. There's a lot of good things to this stock. It's not one for me, but it won't take you long to read articles on the internet and find a lot of people who are bullish on it. So if you like it, do your due diligence, but it feels like the street opinion on it is strong. You just need some buyers. Morningstar fair value equals 1 year. I believe that is correct. So Mr. Mugai is asking about how long, if Morningstar puts a fair value price, what is their target for it? They can refresh it just like an analyst does multiple times a year. But what they're saying, and you should type it in to Google, they're saying that each share that you get has an inherent value, not only based on the company's revenue and profits, right? But also the technology and the competitive moat that they own. So you're also getting a share of their competitive advantage by owning the stock, right? So at fair value, it's a good price target to see where there's opportunity. But I would probably, when I look at it more as Morningstar is a reputable company that actually valuated this company today. Like they valuated it, and it includes projected growth, and they're saying each share is worth $4,200 based on their calculations in Amazon's case. So that's how I look at it. And like I led this video off, I'll say it again, you guys do your own research, but dude, they are conservative, okay? The fact that Palantir is in there is mind-boggling to me because they are so conservative in a positive way. You know, there's a lost art of stock media because of social media and YouTube, myself included, where people just rattle off picks, right? Just like ding, 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 and I like this stock, I like this. But Morningstar is not going to publish a report like they've done with the companies I've used here without significant research. Okay, so that's the only reason that I would say you don't have to believe everything that they put in there. You don't have to believe that their fair value is the Bible, but do know that it has been well researched before they wrote that down. And that's something that, frankly, the internet is lacking. All right. Sea Limited might take over Amazon Asia. That would certainly be interesting. I knew that Sea Limited was going after some of Melly's market, and I'm imagining that they're going after Alibaba. Does Amazon operate in China? I don't think so. But Asia, that's a whole nother game. So it doesn't have to be China. But so Andy's point, obviously bullish on Sea Limited. That's one that I've looked at several times. For whatever reason, it makes a ton of sense to buy that company. I just can't do it because every single time I go to buy it, and it's proved me wrong every time, it just keeps, that valuation multiple continues to go up. What I would really like, selfishly, to happen with Sea Limited, it's been so long, get some bad news. Have a bad headline for once. Like, gee whiz, this thing is just growth headline after growth headline. Maybe I'm dumb, but I'll wait for a bad news to come out. It'll happen eventually. But I'll tell you one thing, after going into the Melly stock in detail recently, and that's one I've watched out of the corner of my eye, right now I would lean more towards buying Sea Limited over Melly if I was just going to attack international e-commerce. So for whatever that's worth. CLSK is another minor choice. Good to know. Good to know. I don't know what to think of those mining stocks. Obviously, they're banking on crypto, right, being worth more, just like gold miners. You know, if you watch that show with Parker Schnozzle or whatever, that gold show, like there is an environment where gold mining doesn't exist based on the price of gold. When price of gold gets high, people like on that TV show, it's worth it to scrape the freaking ground and get 2 little fillings out because it's that valuable. So with mining, I'm assuming in the crypto space, it's about the same thing, right? Costs a lot of money to build those mining servers or whatever they are. It costs a lot of money to operate them, electricity, the yada yada. So when Bitcoin falls, mining stock falls too, because it doesn't make as much economic sense to do it. I need to read more, but Coinbase and a mining stock, if you're like me and you're not that knowledgeable about crypto in detail, those could be like good plays. I mean, I've bought I've bought shittier companies, to be honest with you, and now seeing what crypto's doing, it's like, man, maybe I should just get one of those. I had GBTC as sort of a Bitcoin ETF, loved it. It got up to $45 or something, and I sold it to just take some profits. And that's when I started thinking about maybe I'll buy crypto directly next time. And here we are. So I do need to get some more exposure in there. All right. Mark Twain, this is John Spencer. Mark Twain said the definition of a gold mine is a hole in the ground with a liar standing at the top of the hole. Very, very good. And I don't know how those gold miners do it. I mean, I sold, my father passed away a couple years ago, and he had an extensive coin collection. And I worked with a very nice gentleman who purchased that, a lot of those, and I saved some for myself. But long story short, I was talking to him about his business, and like the way he was buying, at least for me, I don't know what he does for other customers because I knew, roughly what the hell I was doing. It's like spot price. So gold has a spot price. I think today it went up a lot. Maybe it's 1,800. And then spot minus 5%. And then he sells it at spot plus 5%, which sounds awesome, but that's not linear. That's not every day. Like, it's great for me if I go in on a high day and sell, and granted I take 5% off, but you also just don't meet a bunch of people on the street who have that kind of cash laying around. But this guy's entire world is held in precious metals, and I don't know. It's just the profit margin in there and the holding cost. You do not need to open a coin store or precious metals type store unless you are mega bullish that gold and silver do nothing but go up. So I told him before, I was like, you ever think it's weird that you buy, something off me today that could drop $100 tomorrow? And he's like, oh, it's just part of the business. He's like, I'll buy somebody else's stuff tomorrow for less than yours, minus 5%, and I'll mark it up plus 5. He's like, the key is volume. That's what he was saying for his store. So interesting side story, or I thought it was interesting anyway. All right, guys. Hope you're doing good. Cole has $80,000. If it was me, Cole, I would not invest it all on the same day, for starters, and I would divvy it up across some different ETFs or index funds to be safe, especially if you have no investing experience. Don't rely on YouTube people to tell you. Just as a fun exercise, I would probably buy QQQ. I would probably buy some S&P 500 as like a hedge, or maybe the total stock market index as like a hedge, but I would release that money slowly into the market because it would freak me out that I bought on the last day things were up if that were to happen. So, all right, hey guys, thanks a lot for coming. Hope you enjoyed this. We'll see you on the next video.